Welcome back to Investing Talk Podcast. Today, we're going to be taking a closer look at a tech stock that's been making some serious waves. ARB IoT Group, trading under the symbol ARBB. This company's stock price has been pretty wild lately, and we're going to try to figure out if this is a hidden gem or if it's a bit too risky. We have our expert with us today who's going to help us decode all the financial jargon and really make sense of what's going on.
Okay.
So ARBB recently announced a pretty huge deal, a $45 million deal, to supply 500 AI servers. For a company that had a $5 million IPO just 2 years ago, that's a big jump.
Yeah, it really shows the high demand for AI infrastructure, particularly in Southeast Asia, where ART Group is based. Businesses all over the world are adopting AI, and that means they need the computing power to back it up.
And this deal highlights ARBB's interesting approach. They're not just selling hardware. They're actually partnering with companies like Asus and ServerSphere to develop more affordable AI solutions. Forbes has been talking a lot about how the Internet of Things is driving business innovation. How does ARB IoT Group fit into that bigger picture?
Well, ARB IoT Group is riding that wave of innovation. They've got these partnerships, plus a new distributor agreement in East Malaysia, which shows they're really trying to capture a significant part of that growing market.
But we can't ignore those price swings. ARBB stock went up 63% in a single day back in March, and even more after hours. What's causing all that volatility?
It comes down to something called low float. ARBB only has about 15 million shares available to the public. With so few shares, any trading activity can cause those big price swings.
Oh,
So there's a high potential for quick profits, but also a high risk of sudden losses.
that's a high-stakes game then. The stakes are just amplified because of that low-float situation.
Right. Investors need to know that ARBB stock is vulnerable to manipulation because of that low float. Even a small number of buyers or sellers can really affect the price.
So on the one hand, we have this exciting company in a growing sector landing major deals, forming these partnerships. But then there's this volatility, the low float, and some potential warning signs.
Yeah.
Analysis from Simply Wallcent has raised concerns about ARB IoT Group's history of revenue growth, even pointing to some potentially serious warning signs. Should investors be worried?
It's essential to carefully analyze the company's financials. The $45 million deal is promising, but can ARB IoT Group turn that into a steady stream of revenue? That's what we need to see.
So we're all waiting to see if this deal is a sign of more to come or just a one-time thing.
Exactly. Investors need to see how the company performs in the next few quarters. Can they turn this potential into real, lasting growth?
If you don't mind, could you give us a quick explanation of RSI and moving averages for those who may not be familiar with technical analysis?
Sure. The Relative Strength Index, or RSI, is basically a momentum indicator. It looks at recent price changes to see if a stock is overbought or oversold. Moving averages, on the other hand, are trend-following indicators. They smooth out price data by creating an average price that's constantly updated.
Thanks for clarifying. What does the technical analysis tell us about ARBB stock now?
Well, the technical indicators are giving mixed signals. ARBB has had some impressive gains, but it's currently trading below its key moving averages, and the RSI is neutral, which means there's no strong momentum right now.
So no clear signs of a continued upward trend.
Right. The stock might stay at its current level for a while, or we might see it pull back a bit before it makes another significant move upwards.
It seems like there's a lot going on with this company. It has the potential to be a big player in the AI and IoT world, but there are definitely some risks. Let's get into some more detail about what our sources are saying. You mentioned some pretty interesting points about those recent price movements.
Yes, back on March 4th, the stock surged 63%, closing at 85 cents per share. And after hours, it went even higher, reaching $1.27, a 121% increase.
That's a huge jump.
It just goes to show how volatile this stock can be, especially with that low float factor we talked about.
And our sources mentioned that Simply Wallcent raised some red flags. Can you tell us a bit more about those?
They pointed out that ARB IoT Group's revenue growth hasn't been very strong lately, and they highlighted some warning signs that investors need to be aware of.
What exactly are they worried about?
One of their main concerns is whether ARB IoT Group can turn this $45 million deal into a consistent source of revenue. They're not sure if this deal is a sustainable part of their business model or just a one-off.
So it's not clear yet whether ARB IoT Group can really make the most of this opportunity.
Right. We'll have to wait and see.
This brings us to the big question for our listeners. Should they buy, sell, or hold ARBB stock right now?
Well, it's not a simple answer. We need to look at all the positives and negatives.
I understand. you're not here to tell people what to do with their money, but could you maybe outline some different perspectives that investors might have?
Of course. Short-term traders might see this volatility as a chance to make some quick profits, buying low and selling high. But that's a very risky strategy, and it's not for everyone.
What about long-term investors?
For those looking at ARBB as a long-term investment, the focus will be on whether the company can show sustainable growth and live up to its potential. They'll be watching to see if those deals and partnerships turn into consistent revenue.
So patience and research are key here.
Absolutely. Investing is a marathon, not a sprint. It's crucial to do your own research, understand the company, its financials, and its competition. Don't just rely on what you hear here or from any one source.
That's great advice. It's all about aligning your investments with your goals and risk tolerance. We've talked about a lot in this first part, from ARBB's business model and recent activity to their financial performance and technical analysis. We've even touched on the risks and potential rewards of investing in this company. We'll be back with part 2, where we'll take a closer look at ARBB's leadership, what the market is saying about them, and the trends shaping the AI and IoT world.
Okay, let's talk about the team behind ARB IoT Group. Understanding the leadership of a company can be really insightful.
You're right. Every company reflects its leadership. So who are the key players here?
ARB IoT Group has a leadership team with experience in tech, finance, and business development. That's a good mix for navigating the AI and IoT world.
So they have the expertise to guide the company. What about their connections in the industry?
Their board of directors has some deep roots in the Malaysian tech sector. That local expertise could be a real advantage as they look to expand in Southeast Asia and beyond.
It sounds like they have a solid network.
Yeah.
But let's get back to those concerns from Simply Wallsaint. How serious are those warning signs?
We shouldn't dismiss them. Simply Wallsaint questioned ARB IoT Group's revenue growth and highlighted some potentially serious issues.
What are the analysts specifically worried about?
Their main concern is whether this $45 million deal is truly a sustainable part of their business or just a temporary bump. They're hesitant to assume this one deal will solve their revenue problems.
So it's not just the size of the deal, it's about the long-term impact on the company's financials.
Exactly. Investors need to consider if ARB IoT Group can consistently secure deals of this size or if this was a one-time thing.
That brings up a good question. How can investors tell the difference between a company riding a wave of hype and one that's actually set for sustainable growth?
One way is to look past the headlines and really dig into the company's financials. Analyze their revenue trends, their profit margins, and their debt levels. Those numbers can tell you a lot about the company's health and its ability to make consistent profits.
So look beyond the excitement and really examine those numbers to get a sense of the company's financial stability.
Right. Also, pay attention to what the company's management says in their financial reports. That section often provides valuable context about their strategic plans and how they plan to address challenges.
So while the recent deal and their position in the AI and IoT space are promising, it's important to approach ARB IoT Group with a healthy dose of caution.
Absolutely. Don't let the excitement cloud your judgment. Do your research, weigh the risks, and make sure this company fits into your investment strategy.
Speaking of hype, there's a lot of it around AI and IoT right now. How can investors separate real opportunities from potential bubbles?
You need to distinguish between companies that are truly innovating and those that are just following trends. Look for companies developing real-world applications for AI and IoT, solutions that address actual problems and offer value to customers.
It's not just about being in the right sector. It's about making a real impact with a solid business plan.
Precisely. Look at their products, their competition, and their track record.
That's a good point for our listeners. Don't get caught up in the excitement. Focus on the fundamentals and see if the company can actually deliver.
Definitely. And remember, any investment in emerging technology comes with inherent risks. The AI and IoT landscape is always changing. Today's leaders could be tomorrow's followers.
So even if a company looks promising, it's important to stay informed about what's happening in the industry and be ready for potential changes.
Exactly. Adaptability and continuous learning are really important for successful investing, especially in fast-moving fields like AI and IoT.
This has been a great discussion about ARB IoT Group and the overall AI and IoT landscape. We've covered a lot, from their recent deal and leadership to the risks and rewards of investing in this volatile sector. We'll be back with part 3, where we'll wrap up with some final thoughts on ARB IoT Group's future and leave you with some key takeaways. We've looked at ARB IoT Group from a lot of different angles: their leadership, the market, the financials, even how that low float affects things. But what about the bigger picture? What does the future hold for this company?
Well, ARB IoT Group is at an interesting point. They have this big deal, they're in a growing sector, and they have a good team. But those concerns about their revenue and that volatility in their stock are still there.
It feels like they could go either way. What are the most important things that will determine their success or failure over the next few years?
It all comes down to execution. They need to show they can turn that $45 million deal into a steady revenue stream. They need to show good financial performance. The market will be looking for signs of that in their next quarterly reports.
Aside from the financials, what else should investors keep an eye on?
I'd say keep an eye on those partnerships. Are they growing those collaborations with ASUS and ServerSphere? Are they getting new distribution agreements to expand their reach? Those moves would show they're really committed to innovation and growth.
And what about the market in general? How might changes in AI and IoT affect ARB IoT Group?
The AI and IoT world is constantly changing. ARB IoT Group has to stay ahead of the curve. They need to keep developing new solutions that meet the needs of businesses.
So they can't just ride the current wave, they have to anticipate the next one.
Right. They need to be adaptable, willing to embrace new technologies, and they need to stay after their competitors.
This brings us back to our listeners. What are the key takeaways they should keep in mind when considering ARB IoT Group as an investment?
I think the first thing is don't get carried away by the hype. Do your own research, understand how the company works, look at their financials, and consider their track record. The second thing is to be aware of the risks. That low float makes them vulnerable to volatility and manipulation. And their financial history does raise some questions.
So it's about looking at both the good and the bad.
Exactly. And lastly, investing in new technologies requires patience. Don't expect to get rich quick. Be prepared for some ups and downs. Stay informed and make smart decisions based on your own financial goals.
That's some solid advice. This has been a really interesting look at ARB IoT Group. It's a company with a lot of potential, but some definite challenges too. Hopefully, our listeners now have the information they need to make their own decisions.
As always, thanks for joining us on Investing Talk Podcast. We appreciate you being here for this deep dive into the world of tech stocks. If you like this episode, please subscribe, like, and leave a comment. We'll see you next time for another exciting look at the financial markets.